Today on Business Incorporated, OPEC plus seeks oil policy consensus as UAE demands changes. Zimbabwe's president says he's committed to ending hunger and poverty. And launch of West Africa's first exchange-traded derivatives receives further boost as Nigeria's Securities and Exchange Commission approves 7 NGX's derivatives contracts. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We kick off with the markets, and here in Africa, the Nigerian Exchange Limited has received approval for 7 derivatives contracts from the Securities and Exchange Commission. The approved contracts are Access Bank PLC stock futures, Dangote Cement PLC stock futures, Guarantee Trust Bank PLC stock futures, MTN Nigeria Communications PLC stock futures, Zenith Bank PLC stock futures, NGX 30 index futures, and NGS Pension Index futures. With these approvals, NGX is inching closer to launch West Africa's first exchange-traded derivatives supported by NG Clearing in the risk management process. Meanwhile, the all-share index at the NGX was marginally up as at noon. The JSE index in South Africa was down 0.15%. Egypt and Kenya both closed positive on Thursday, 1.32% and 0.77% each. In the Gulf region, markets are closed on Friday. Weekend begins on Thursday. Well, the last trading day saw the Abu Dhabi market up 0.93%, while Dubai rose 0.21%. Saudi Arabia was down marginally 0.05%, and Qatar was up 0.71%. In Europe, markets were modestly higher on Friday morning as investors awaited a closely watched U.S. jobs data. But before we weigh into that job data, Ashutosh, a total of 130 countries have agreed a global tax reform that would ensure multinationals pay their fair share of taxes. How has this been the reaction there where you are?
Well, it's been largely welcomed, and because it's not often we see 130 countries representing 90% of the global GDP agree on tax matters, and that's why it's significant. The German Finance Minister Olaf Scholz, he called it a colossal progress against tax avoidance. The French Finance Minister Bruno Le Maire, he said it's a historic, ambitious and innovative agreement. Then U.S. Treasury Secretary Janet Yellen, she termed it as a historic day for economic diplomacy. So clearly the politicians are happy about at least making a major headway as far as this tax reforms is concerned. Now it will be discussed at the G20 meeting later this month. But there are some experts who are also not very happy. They feel that the deal does not go far enough. The 50% minimum corporate tax is not high enough. And the second part of the reform does not really target many, it only targets the big companies and leaves out many other middle-sized companies and smaller companies. And so they would have liked it to be more broad-based than what it is right now. But nevertheless, they do concede that it is a good first step and a historic one at that.
3 EU countries, including Ireland, have declined to back the deal. What are their concerns, and what would it mean for the overall tax deal?
Well, the Ireland says that while it broadly supports the deal, it is not happy with the 15% minimum corporate tax rate. It says that smaller countries should be given that flexibility of using tax as a way to lure investments, because they are at a disadvantage vis-a-vis the bigger countries, which can actually, they do have a natural advantage to attract skills, people with skills, and they also have the advantage to attract big investments. So the smaller countries should be given that flexibility. Right now, its tax rate is 12.5%, and that has actually boded well for the country. It has attracted investments from major IT firms in the US. And as far as Hungary is concerned, their tax rate is 9%. So that's why they are upset with the 15% tax rate. Viktor Orban, the leader, calls it absurd 15% tax rate, and he says that that shouldn't be the case because the country should be allowed to actually attract investments, and it has successfully actually managed to attract investments as far as auto industry is concerned, manufacturing sector is concerned. And so these are the main issues, and now it remains to be seen how the EU deals with these countries who are opposed to the tax reforms. So far, French Finance Minister Bruno Le Maire has said that he is going to work actively to get these countries on board, and perhaps looking forward to a deal as early as this year.
And the all-anticipated U.S. job numbers should have been released by now. Did you manage to, get an insight into what it says?
Yeah, I mean, the release just dropped in, and it says that the non-payroll employment rose by 850,000, but the unemployment rate was little changed at 5.9%, and it says that the gains were mainly seen in leisure, hospitality, public and private education, professional and business services, retail, trade. So all these sectors which are actually opening up because of the economy opening up after the pandemic. So clearly, the analysts were expecting 700,000 job additions, and now there are 850,000. So clearly, it has trumped all estimates there, and that is actually something the market would be looking at. This is a sign that the economy is actually recovering. It's in a strong path, and if you remember that it is the job market that the Federal Reserve has been citing to actually maintain its ultra-loose monetary policy, and with the job market recovering, for now, the Federal Reserve would be keeping a close eye on the job market still, because there are still around 7 million people who are jobless compared to what, there's 7 million people who are still out of job there, as compared to those people, compared to pre-pandemic, that is 2019 or February 2020 rather. So they are going to keep a watch on that, and that's the major cause of worry as far as the job market is concerned. It is still not where the Fed Reserve really wants it to be.
Well, Ashutosh, we can just say thank God it's Friday. It's been a great week with you. Enjoy your Friday and, of course, the weekend.
Thanks a lot, Chimi. You too.
And this U.S. job data, arguably, is the most important data release of the month for global investors. Let's see how that is being read in London with Juliana. Hi, Juliana. Well, the all-anticipated U.S. job data, of course, has been released. What sound bites are you getting where you are? Well, in the morning, the FTSE 100 hit its highest level in over 2 weeks.
Absolutely. Good afternoon, Chimese. It literally just dropped as you were speaking to Ashutosh there. I had a quick sneaky look on my phone, and I have seen that it has come way above expectations at 850,000 jobs that they were added to the US economy during the month of June. As Ashutosh was saying, the expectation was about 700,000 jobs, and this is crucial information. Lots of talk at the moment about inflation. That's been a topic of discussion over the past month or so, hasn't it? Currently running above 4% in America. The Federal Reserve has been a little bit cautious about trying to tighten up the ultra-loose monetary policy. And they did say they were going to be looking at the labour market. And the labour market is robust. There were concerns previously, just as we have here in the United Kingdom, so many vacancies, not enough people to fill those jobs. But alas, that is now the case. So some may start to ask, is the economy ticking over? Is it time to start tightening up, which we know is going to affect so many of the tech companies and other stocks that have really benefited from this kind of pre-pandemic, although this post-pandemic, current pandemic era of global trading that we're in at the moment. So it's very, very interesting. The market was in a wait-and-see mode, but now they've got the numbers. So it looks like we're going to be heading into positive territory for the weekend, definitely within the square mile at the very least. FTSE All-Share is up at intraday by 0.19%. The FTSE 100 is up by 0.12%, and the FTSE 250 is up by 0.44%. In the currencies market, the British pound is down against the US dollar by 0.10%, up against the euro by 0.03%, and down against the Japanese yen by 0.20%.
And, of course, Sir Richard Branson has named the date he'll be flying to the edge of space, July 11. He's aiming to beat Jeff Bezos by 9 days.
He is. He has announced it. The billionaire, worth $5.5 billion, just in case anybody wanted to know. He is the chairman of Virgin Galactic, which is a kind of newish company trading on the New York Stock Exchange that is going to make space travel commercial. If you've got $1 million or so dollars in your back pocket, then you can go on a space flight to the edge of space, no further than that. Sir Richard Branson, will be going for a trial with the rest of his crew. He announced it earlier today on Twitter, much, I'm sure, to the anger of Jeff Bezos, another multi-billionaire who has started his own rival space travel firm called Blue Origin. He announced that when he announced that he'll be stepping down as CEO from Amazon. Jeff Bezos will be going much later in the month. He'll be going with his 80-year-old brother pilot. And also they have mentioned that another individual, I believe there are 4 individuals that are going, and somebody has paid $28 million for that seat. So, of course, extremely, if you're very, 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 very wealthy, then this is absolutely fantastic for you. But then a lot of individuals are hoping that this is also going to provide some sort of scientific evidence for planetary observation. But yes, a battle between the billionaires.
Well, I guess that is not for people like you and I. All right. Thank God it's Friday, I must say. Lead us into what to expect next week.
Yeah, absolutely. Thank God it's Friday, Chimazee. Next week, we got some final numbers for PMI for the month of June, which are going to be interesting. We are having a look at the private sector. The private sector in the UK is booming at the moment. We've had record-breaking numbers for the PMI, so we'll just wait to see if we get confirmation from that earlier in the week. And then the all-important day is going to be Friday, which is GDP day for the month of May, the second month of Q2. First month of Q2, April, it was up. GDP was up 1.5%. The markets are saying that it could be anything between 3.3, 3.7%, which is very, very good. We had revised GDP numbers for Q1 earlier this week, bringing down or expanding the contraction from 1.5% to 1.6%. So, yes, it will be interesting to see just how well the economy is doing as everybody is starting to come out and spend all their pounds sterling again.
Well, quite a lot of data to chew there. While we wait for that, enjoy your weekend, Juliana.
Thanks, Jimmy. You too.
And Asia-Pacific stocks were mixed on Friday as investors looked ahead to a closely watched U.S. jobs data. Mainland Chinese stocks were among the biggest losers regionally as the Shanghai Composite fell 1.95%, while the Shenzhen Component dropped 2.44%. Elsewhere, the Nikkei 225 in Japan nudged 0.27% higher. Shares in Australia rose as the S&P ASX 200 advanced 0.59%. And futures contracts tied to the major U.S. stock indices were mildly higher in early Friday morning trade as Wall Street awaited the key June jobs report and another glimpse at the recovering U.S. labor markets. Contracts tied to the Dow Jones Industrial Average added 59 points, while those linked to the S&P 500 and Nasdaq 100 both traded in slightly positive territory. While Friday's headline job creation number is important, traders will likely scrutinize the change in average hourly earnings for any signs of an unexpectedly large uptick in wages. And to the global oil market, an OPEC Plus deal to release more oil to the market and extend its supply management policy to the end of 2022 hinges on agreement from the United Arab Emirates, which has opposed the deal and pushed talks into a second day. The UAE on Thursday effectively blocked a deal agreed by top producers Saudi Arabia and Russia to ease oil cuts by 2 million barrels per day by the end of 2021 and extend the remaining cuts to December 2022 from April 2022. OPEC Plus sources have said the UAE thought it did not object to the output increase, is arguing that a new deal needs to acknowledge that the UAE has higher production from which cuts are being made. The UAE has ambitious production growth plans and has invested billions of dollars to boost capacity. The supply pact, however, has left about 30% of UAE capacity idle. Meanwhile, oil prices held steady on Friday after OPEC Plus ministers delayed a meeting on output policy as the United Arab Emirates balked at a plan to add back 2 million barrels per day in the second half of the year. U.S. West Texas Intermediate crude futures were up 5 cents at $75.28 a barrel, having jumped 2.4% on Thursday to close at their highest since October 2018. Brent crude futures inched up 4 cents to $75.88 a barrel after rising 1.6% on Thursday. After the break, more to come on Business Incorporated. To stay with us. Well, Africa's agricultural sector is set for exponential growth in the coming decade. This is according to a research commissioned by Microsoft and compiled by Africa Practice Reveals. The report states that with a projected value of trillions by 2030, the continent is poised to become the global center of Agri-tech solutions and has also been seen rapid growth in e-agriculture solutions. Let's have this conversation with co-founder and CEO Huchi Capital in Kampala, Uganda, Terence Chambati. Thank you very much, Mr. Chambati, for joining us on the program. Good afternoon.
Good afternoon, Jimmy. How are you?
Very well, thank you. Well, with agriculture sustaining 70% of Africa's livelihoods, Microsoft believes that agriculture is a key sector in Africa. Where is Africa when it comes to agri-technology?
So I think as Africans, we've got the biggest competitive advantage. I think the president of the African Development Bank once said the future millionaires and billionaires of Africa will not only be coming from the oil and gas sector, but will be coming from the agricultural sector. And we've got the greatest mass of land and arable land for that matter. And we now need to really take agriculture as a business and not just as a form of subsistence. So this is where we've got a competitive advantage as Africa to not just feed Africans, but to feed the whole world and become the global breadbasket for the whole world.
Now, between 2016 and 2019, the agri-tech sector grew by 44% year on year, and the continent has registered the highest number of agri-tech services in the developing world, reaching over 33 million smallholder farmers to date, with Africa becoming a global leader in the agri-tech space. But what are the key challenges you see here?
So, Jimmy, I think we really need to just go back and see that we need to move into the fourth industrial revolution. And within that, we really need to embrace exponential technologies. I think when you started off the conversation, you did mention that the agricultural sector is set to grow exponentially. And there are some technologies which have aided the agricultural sector. You're looking at things like artificial intelligence, biotechnology, nanotechnology. Solar energy, as basic as it may be, has also had a great impact on the agricultural sector. The use of pumps, drones coming into play as well. So embracing these exponential technologies is currently aiding the agricultural sector across the continent, whereby where you had to go and physically check on your plantation or something, you can now use a drone and use GIS services. You can actually get a footprint, a digital footprint of what is happening within your plants. Bringing in robotic self-driving cars. We need to actually now just bring in these technologies and embrace them for the benefit of the agricultural sector across the continent.
So how can African governments leverage the opportunity presented by agri-tech solutions to address some of the continent's most pressing challenges of food security, income inequality, and livelihood, for its fast-growing and youthful population?
Sure. I think as African governments, we really just need to look at the basics. The number one, the SDGs. What is the start of it? Zero hunger, zero poverty. How can that be addressed? We are looking at agriculture, and agriculture forming the base of it. Let us look at how can we use data, how can we use technology to help us answer the problem of hunger and poverty across the continent. So you're looking at issues like leveraged assets, where you had a tractor service in one particular area. Why not use the same tractor to be hired across 2 different districts or 2 different provinces? Or even more than that, Why don't there's an abundance. Before we used to manage for scarcity, but now I think we've got an abundance of labor, an abundance of technology at which we can make use of to actually address the issue of agriculture and bringing in technology into that. The governments now need to make sure that they make data accessible to every general farmer. When they've got power of information, they can actually look at the weather patterns coming in. Feature phones, smartphones become a necessity where people can actually look at the weather conditions. How can we embrace technology? How can we bring data? Because if anything, if you can't measure anything, you will not be able to improve it. So the more we embrace data, technology into the agricultural space, for the governments as well, because it contributes a lot towards the GDPs of our African governments. Most of our African governments are actually powered by agriculture. And when we now look at the GDP, how can we improve that? Let us start utilizing data in recording. I'll give an example of the beekeeping industry. Many countries do not know how many beehives they've got within their countries. But our global north, they've been able to actually make sure that they know the number of beehives they've got, how many bee colonies they're dealing with. How does that affect the global agricultural technology? Is pollination services. If we are able to know how many beehives we've got across the different African countries, we will be able to know that this is the impact of natural pollination coming through from bees. So it's really important to address the issue of data.
Now, as a player in this sector, we've just got into the second half of the year. What's your outlook for this sector?
So I didn't get you there.
We have just entered the second half of the year. What is your outlook for the sector?
Thanks for repeating that. So Chimo, we've just, for example, here in Uganda, we've just gone into another lockdown period due to coronavirus. And this is the time for us to be embracing digital technologies. And going into the second half, the coronavirus waves will be coming in, different strains will continue coming in. How can we manage remotely? How can we remain effective remotely? How can we ensure that we are there without having to be physically there? So this takes us back to the whole issue of technology. How do we embrace technology so that we can remotely monitor and support our physical efforts towards managing our agricultural businesses? The last mile is very important. I think that's one last leg which has to be addressed. Payment systems have been improved, online payment systems, but the last mile of saying how do we improve the difference between the farm gate and what the consumer is actually paying. This has got to do with the last mile. I think this is an area which still needs to be addressed from an Agri-tech point of view, and we'll be able to actually add value to that whole value chain from the farmer up to the table.
Teres Chambati, we do appreciate your time with us on the program.
Thank you very much, and have a good day.
President Emmerson Mnangagwa of Zimbabwe says his government stands ready to play its part to end hunger and poverty through collaborative efforts with other nations, as well as supporting the critical agricultural sector. Addressing a virtual United Pre-Food System Summit dialogue that was hosted by Malawi President Lazarus Chakwera, the president said as the world moves towards eradicating hunger and ending poverty, institutions of higher learning must be roped in to offer innovation that climate proves the vital agriculture sector. The president said the national dialogue, agriculture production and food system transformation highlights the centrality of a multiple stakeholder approach to agriculture transformation. Towards sustaining agricultural production and productivity, the president says Zimbabwe has made various key interventions that will increase output and ensure food security. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.